NISM Course Part 13. Rights Issue and Private Placements. Introduction. This section covers issuing new securities exclusively to existing shareholders, rights issue, and the methods used by companies to raise capital privately from a select group of institutional investors. Rights issue of shares. A rights issue is an offer of new shares made by a company exclusively to its existing shareholders in a fixed ratio to the shares they already hold. Preventing dilution. This mechanism is primarily used to prevent the dilution of proportionate holdings of existing shareholders when the company issues fresh capital. Process and rights. The issue is made at a pre-decided price in a fixed ratio, e.g., 1:1:3. A listed company must fix a record date to determine eligibility. Rights entitlements are credited to the investor's demat account. The investor has the option to subscribe, decline the offer, or sell their entitlement to another party, renouncing the rights, on the stock exchange. Payments for applications in a rights issue must also be made using the ASBA, application supported by blocked amount, facility. Private placements. A private placement is an offer made by a company to a select group of investors, such as financial institutions, banks, or mutual funds. Advantages. This method is often preferred over a public issue because it is typically less time-consuming, more cost-effective, and involves fewer regulatory compliances. Regulation. An offer is classified as a private placement if it is made to not more than 50 persons. The company is not allowed to advertise the issue publicly. Listing. A privately placed security may seek listing on a stock exchange if it meets the necessary listing requirements. Specialized private placements. Preferential allotment. This is a private placement of shares or convertible debt, like convertible debentures or warrants, made by a listed company to identified persons, such as promoters or strategic investors. This requires a special resolution by existing shareholders. Qualified Institutions Placement, QIP. This is an issue of eligible securities by a listed issuer to qualified institutional buyers, QIBs, on a private placement basis. It is frequently used by promoters to achieve the minimum public shareholding, 25%, mandated by ASBA. Electronic Book Provider, EBP. ASBA mandates the use of an electronic bidding platform, EBP, for the private placement of large debt issues, generally 50 rupees crore or more, to bring greater transparency and efficiency to the process.